Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and we have another interesting Michael Burry tweet here, actually talking about the number of shares that transacted from the dot-com crash and 2008 financial crisis, and trying to elucidate maybe a market bottom timing based upon that tweet. So it's kind of interesting. I'm going to walk through the numbers, and I'll show you what I got.
Well, all right. If you like that kind of entertaining stock market content where it's two stupid guys trying to figure everything out, give us a like and subscribe. Two Stupid Guys Trade Stocks. Hey, Vinny.
All right.
I
Yeah.
just realized our little caveman cartoon is now officially accurate because on the screens it's just tank. It's just a tank
Yeah.
fest. Nice.
Yeah. It's just tank. One of us has to break our computer monitor though for that to really be true. So
I have
we'll
so
see.
many. I'll break mine.
Might yeah, it might happen eventually, randomly. But basically, this was a tweet he was talking about. Like, obviously we've entered into correction territory here. But the question is, like, how long will this last? How deep does it have to go? And it looks like the metric that he's actually relying on here is a multiple of number of shares outstanding transacting, which is what he's looking at. So,
So
basically
volume?
his indicator, yeah, volume of shares transacted is kind of what he's looking at here. For Microsoft, looking at the 2002 dot-com crash, 5.2 times total number of shares outstanding at the time, 3.3 for the 2009 financial crisis. Yet we're only at 0.5 so far, meaning
Now,
we're at 1/6 maybe.
when he says so far, is this from? I get. Well, you're not going to know this because we'd have to ask Burry because on what he's calculating. But like the height of the spy was like 12 months ago at like 492. So is it from then, or is it from this recent tank, which has been fairly quick and rapid? I'm
I think he's looking at the recent tank. So I looked at the stocks over the last year or so, the three that I named here, and for the most part, they all had a most recent peak, maybe not the all-time high peak, but pretty close to the same level in November. Was right around their timeline.
okay. All right.
So that's kind of like where I was counting from. But only, like I said, about sixth of the way through in terms of Microsoft. Amazon, it's faring a little bit more in terms of that because they've been pretty volatile recently. But they did 5.7x back in the dot-com crash and 6.6x volume for the Great Recession. Only 0.9 so far. So right around the sixth or so, too. Then JP Morgan here, so 3x for the dot-com crash, 5.9 in the Great Recession, but 0.7 so far. So maybe about a third or so if you're looking at the low end in terms of number of shares transacted.
I think
So
JPM or like banks in general will be on the lower multiple this time because like they were on 6 for the 2009 one, which makes sense. Banks were
yeah,
ridiculous. This one's a little bit
100%.
different.
100% agreed. So the big daddy here, I thought that is the one that's kind of closest is going to be Amazon. Amazon has had like a pretty brutal sell off lately. It's one that I kind of need to do some due diligence on and see if we can figure out where I would feel comfortable buying Amazon because when I see graphs like this, I start getting a little bit more interested.
Yeah, no, I mean it's
Frankly,
way cheaper. It's
yeah.
33% off than it was 2 weeks ago, 4 weeks ago.
I know that is the best Prime Day sale in history. 33% off on Amazon itself.
That's yeah, it's pretty good. Not bad. And they have the stock split.
Yeah, stock split coming up too. Exactly. Yeah. Microsoft has had another little pullback here, but nothing too crazy. Yeah, sorry, I didn't mention before, but you're looking at this kind of November peak right here. Did have a higher one back in the summer, but pretty close in that November time period to the same kind of level. In terms of Microsoft here, you'll see that they had a peak in November as well, right?
Yeah, I'm fixing
Dylan,
my camera. Sorry, do back.
oh,
Go
so
back to
you
your
lost
thing.
your camera. And then
Fixed
we had
it.
another peak here for JP Morgan back in
Low budget
November
here, guys.
timeframe. Yeah, no, exactly. Low budget, no budget. But JPM right here, okay. And now, what I did basically is I multiplied the number of shares outstanding at this 3 and 6x volume from peak to trough. I looked at the number that they've transacted so far and subtracted that from the both the 3 and 6x peak, and then I tried to look at like when that would happen, right? And then we divided it out here by the 10-day average. This is all numbers from CNBC is where I got these, okay? So this is the total number of shares outstanding for Microsoft, and then we have the 10-day average of 40 million shares. Amazon 508, 6.78 million transaction per day, 10-day average, and then 2.937 billion shares for JPM and $15 million shares per day,
Okay.
10-day average. So in order for the number of days, then I calculated the number of days that we would take average trading volume in terms of trading days based on the 10-day average here for them to get to that level. So for Amazon, who's the closest here, to get to this 3x multiple, if they maintain the current 10-day share average, would be another 157 trading days.
So additional from right now,
From right
assuming we
now.
start in November. So another 6 months.
Exactly. Yeah. And that's assuming that the volume remained constant, which we know it doesn't, right? When you have
It
really
honestly
negative
might be
days,
higher.
volume will tend to spike. Yeah, exactly. We're going into the summertime, which is typically a little lower volume season. So this is like a rough estimate, basically, based on this.
I think
But
Amazon's going to be the most interesting one because the stock split's happening too. So you're also going to have more volatility. They might even be quicker.
it's possible, yeah. Certainly that I could help move things along in terms of the rapidity of the share transaction period here. But we're looking at still some pretty sizable numbers here before they would actually get to this, assuming current volume, which is pretty paltry, I guess, in comparison. There's a 253 trading days per year, in case you were curious. For your calendar cataloging and your day trading activities.
So you mean all I have to do is make 1,000 a day, and then I make 253,000? Why doesn't everyone just do that?
Yeah, I mean, I signed up for one of those online courses I got from someone on TikTok. And that's my goal too, man. $1,000 a day. They said it's pretty easy. We'll see.
It's really,
See if,
yeah. There's like a million YouTube videos on that.
yeah, exactly. So if we went with that early number on Amazon, 153 trading days, and counted out through the rest of 2022, we basically would say that Amazon would bottom, reach this 3x multiple at least. Yeah, assuming they go to the low end of that, around December 28th of this year.
Okay. I think that's a reasonable timeline. I don't think it's going to be a lot longer than that. I think also more tech stocks are going to get more volatile in the coming August. I think we're going to have like a little
Yeah.
bit of a slump, right? Um, I feel like banks are probably going to hit like 1.5 or
Okay.
2. I
Yeah.
don't think they're going to hit that
Uh,
much.
no. I mean, I think that's very reasonable. I just thought it was interesting the timing wise here. Is this? It, so you're basically they're saying if you actually follow this out, which is like I said, it assumes a lot of things. You're looking at the bottom being somewhere towards the end of 2022. A lot of CEOs, based on their comments, are really talking about an reacceleration of growth in the second half of 2022. So it's interesting that like the stock market bottom would be so much delayed from there. I'm not really sure. Maybe this is kind of looks to me maybe like might not actually occur.
Well,
These numbers.
I mean, if they're saying second half, let's just say, let's say it's latter 2022, you won't get those numbers till first quarter of 2023 anyways.
True. Very
So that
true.
you won't get all those growth numbers where like, oh yeah, we destroyed these estimates. We're accelerating our 2020 growth. We wouldn't find out till March 2023.
Yeah, that is very true. I thought it was interesting in terms of like how far out this would still be, assuming a lot of things. But like this is saying the rest of this year is going to suck based upon this,
Or give you very good deals.
or be a great time to buy some stocks or sell some covered calls against your current long positions. Because you're not going to get a good run up.
Yeah,
Me, Apple.
I'm trying to just save money and budget and get as much cash as possible because as soon as the SPY hits like 360, 355, I want to put a bunch of money in.
Yeah, interesting. Right now, all my money's going into my house.
Yeah,
Dylan will
yeah,
tell you, I've been doing remodeling projects for the last 3 weeks, basically. Wasn't a fixer upper, but it's been a lot of work.
yeah. That always gets way worse than you think it's gonna be.
Yeah, exactly. All right, guys. Well, let us know what you think about this, like a little assumption timetable of based upon one cryptic Burry tweet.
Yeah. And remember, just because the stock's tanking, not everything's bad. You just got to find the right deal. All right?
Exactly. Catch you
Boom,
next one.
sees.